Good morning, traders. This is your opening bell, and I'm Adam Harris. So it is the 1st of March. We're now into the third month of 2023, and it's rare for me to be out of sync with the market, or it's rare for me to kind of get it wrong this often. And it's not really wrong. It's just that I still have this expectation the dollar is going to strengthen, but it's been back and forth. And actually, the last couple of days, Monday and Tuesday, we've had a weaker dollar. We've had everything else kind of strengthen for it, and it is rare that I'm like completely, let's just say it, completely wrong on that one. So at any rate, that being said, looking at the dollar index today, it looks like it's setting up to go long again, so I'm just going to stick with that. It does look like it's going to get stronger today, but it gets really, really interesting. I'll talk about that in a moment when I get to the charts. Now, just quickly talking about economic calendar news for today in a couple of hours, less than a couple of hours, we've got manufacturing PMI coming out for the UK, which is likely to create spikes in the GBP pairs. We've got Governor Bailey speaking about 40 minutes after that. Not really sure just yet if there's got anything to be prepared for out of that, but certainly I would say 9:30 a.m. And then at 3 p.m. today out of the US, we do have manufacturing data and crude oil inventories. Again, crude oil is really not a thing right now. It's just there's not much that I would expect from it. There's no clear trends on the market, and so not looking to see anything from that. Very few people I would think are actually engaged in that right now. Traders at any rate. And so we have the manufacturing PMI, which is likely to create some spikes there as well. So then if I go, and then in terms of, I beg your pardon, and then also in terms of earnings today, we have Salesforce, we have Lowe's, we have Avid do editing systems and all kinds of software related to entertainment industry, Barlow World, Abercrombie and Fitch, we've got American Eagle Outfitters, Imperial Brands, Dollar Tree stores, you'll know those, Reckitt Benckiser, they do bug sprays and pharmaceuticals and various other things. And then in terms of dividends today, we have Goldman Sachs, Qualcomm, and Shutterstock. And Shutterstock you might be familiar with, providing a whole lot of stock photography and footage. Okay, so there's not as much actually in terms of dividends and earnings. There's quite a bit there, so we'll expect some spikes on those. So when I go and have a look at the charts, it gets really interesting to me. At any rate, we've had like Monday, Monday was a day up, and then Tuesday was a day down, and today it's pushing up quite aggressively. So really is a bit of a push and pull. I can see though that that sterling is pushing higher, the pound is pushing higher. Sorry, that Australian dollar is already pushing a lot higher. So all of those currently, as I speak, are quite aggressive. We're getting a bit of a weaker dollar, and then but where it finishes, when that US session comes online, from around about 2 o'clock, and then certainly by about 4 o'clock, you kind of know if that tide is changing, if it's kind of been low tide and now it's switching to high tide. So that's something that I'm always just concerned about, especially during periods like this where there's a lack of clarity on it. When I'm looking at that dollar index, it looks pretty. It's at a nice little correction. It's within an uptrend. My expectation is to see that to continue to strengthen. And if it doesn't, that's fine. But today it's at a point where it looks like it's getting ready to go. But then I move across to the majors, and the majors are powering over the US, over the dollar. I could see the dollar yen pairs really haven't gone anywhere. And yesterday we had some fantastic trades on the yen crosses, pound yen, Aussie yen, Kiwi, and they just did so well. It was a little bit of a no-brainer. If I look at Euro Swissy, that's still going on to parity, towards parity. Let's have a look at gold. So gold is climbing higher as well. So there we go. So that's surviving against that dollar, which I'm not expecting. Silver is within a downtrend, and so I do expect at the very least that silver is going to work its way up to 21.30 today, if it's able to do that. And then we'll have a look. So crude oil is not offering a lot of clarity on that. We move across to the US indices, and even now I can see they're trying to push back. They're trying to hold where they are. So yesterday, a lot of them finished lower. Day before, some of them had a bit of, were doing really well, potentially finished lower or a little bit higher than they were. And today they're really trying to push back. So I'm going to divide the day into two halves, where essentially we're going to see what happens up until the US Open, and then we'll see how the rest of the US Open goes. But for now, in the run up to the US Open, or at least for the next couple of hours, it looks as though there's some dollar weakness and we're seeing a pushback on it. I'm not completely at rest at this time that dollar isn't going to dominate for the coming weeks, but it's not showing up. It's not doing it just yet. Now, when I look at equities, last thing, I'm just going to wrap up on this. A lot of equities, I saw them actually finish lower yesterday. Some of them are kind of sitting at levels almost like head and shoulder type patterns, where they are looking at support levels that they could end up breaking through. They're not looking super strong. So again, I just have some concerns there. And actually crypto's also managed to hold up better than I expected. So I've kind of called it wrong 2-3 days in a row. row in bits and pieces, which is higher than that's not really my normal. But I stand by my assessment at this time. There's not enough evidence. The evidence still leans towards that dollar trying to strengthen. So I'm just trading cautiously, extra cautiously, having my plan, making sure that I'm prepared for any kind of shifts in sentiment and focusing on charts that were trending really well, which yesterday was some of those yen crosses. That's it. I'll leave you with that. It's a longer one this morning. I apologize, but I want to wish you a fantastic day, and I will chat to you later.